this is Raman Gill. Welcome to episode 53 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at a different topic, and this is market correlations. How can we get into trades and make profits based on other markets or other things that are going on? Some of the examples around this are between gold and Aussie, or Canadian dollar and oil. So in this episode, I will show you how these things are related, what you're looking for in terms of market correlations, how to identify an entry, where to put your stop loss, and as always, how to exit the trade with a profit. So let's go take a look at the charts now. We're looking at the market correlations between oil and US dollar. This is USDCAD daily chart. As we can see, for a while there, US dollar had been gaining on the Canadian dollar, and we came to this 135.96, almost to 13600 area, and from there price dropped. This white line that I have marked here indicates the date that we see the first decline in dollar CAD. Now going over to our oil chart, this is WTI daily, which is the oil chart here. As we can see, this is the same line here on November 14th, that the price came down. This is the oil. Oil had been dropping continuously. As we saw the dollar CAD going up, oil was going down. Oil and Canadian dollar are positively correlated. That means when oil goes down, Canadian dollar will go down. And when oil goes up, Canadian dollar will go up. So while the oil was dropping here, we saw that dollar CAD was going up. So US dollar was gaining on the Canadian dollar. On 14th of November, we saw that the price came and hit a bottom. This is our support and resistance level here, gave us a bullish pin bar signal, and then started going up from there. So this bullish pin bar signal can be traded. This is a major support and resistance area. Twice the price came into this area and failed to go through. And now we have a bullish pin bar. So we could take our entry on the close of this pin bar. Our stop loss would go below right there, and we would stay in the trade till we get a reversal signal. So in this particular case, we could have exited our trade here because we have a negative candle, a bearish candle, and then two small candles. So once you get this, the price doesn't break the high here, the chances are it's likely to come down. So we could have exited the trade right here. And in that case, we would have about 400 pips in the trade. And then we could have re-entered the trade here after this bullish signal, because we have a large, strong candle that takes out it closes right into the highs here. Once the price does that, chances are really high that the price will go up further. So we could have entered the trade here, exited here, and then re-entered after the close of this candle, and then exited at the top here. So there could have been two trades, or you could just take the trade right into the next support and resistance area, which would be right over here, and exit the trade here. In that case, the number of pips that you get are actually pretty much the same. So it would be 700 pips or 740 pips in this case, but they are very, very close. Now, if you don't trade the oil, we could also have taken this trade on the dollar CAD here. So this is our November 15th, 2016 candle. So the day after we get a pin bar, a bullish pin bar in our oil trade, this trade gets triggered here. So we have a bearish engulfing candle. So we see the oil going up as well as the dollar CAD coming down. That is the relationship we're looking for. So once we get this bearish engulfing candle, we can look for a 50% pullback, which we get exactly right here. This is our entry, and our stop would go above the high here, and we sell this. And we're looking for price to drop. As long as the oil keeps going up, we can stay in this trade. Also, we don't really have a lot of green candles here. They're all red. This is a good indication that the price is likely to continue coming down. And then once we get to the next support and resistance area, as we can see here, the candles are getting quite small. So there's no momentum left in the trade at this point. And we were also coming into the Fed meeting, FOMC, right here. So the chances were really high the Fed would raise interest rates. So that's the time to get out of this trade from entry to exit here, we have 380 pips in this trade, or $3,800 if you're trading one standard lot. So in terms of market relationships, you can trade either one. You can either trade the oil, which is our commodity, or if you just want to trade currencies, you could trade the dollar CAD in this instance. But the trades set up at the same time. So here we have on November 15th, our dollar CAD trade gets triggered after our oil trade gets triggered on November 14th. And as we can see, as the oil has been going up, our dollar CAD has been coming down. We see the pullback here. And in oil, if you take a look at the oil chart, we see that the price had pulled back here and now it's going back up. So this going back of the price here is causing the pullback right here. So that's the relationship. When oil goes down, Canadian dollar will go down. When oil goes up, Canadian dollar will go up as well, which means dollar CAD will move in the opposite direction. So that's the relationship. You can trade either one of those, whether you want to trade oil or dollar CAD. Both options are available to you, so you have your pick.
If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course.
Thank you so much for joining me today. You are a wonderful audience, and it's a pleasure sharing these trades with you. If you like this episode, please like, comment, and subscribe below. Hope you enjoyed the show today. I will be back with another great trade in the next episode.